Hello, everyone, and thank you for taking the time to review the real estate market analysis for Santa Clara County, California for September of 2009. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified E-Pro. I'm also the president and CEO of Whitelaw & Sons Real Estate Services, servicing all of Silicon Valley. Now, if you'd like to get in contact with me, I've got all my information up on my website. I also have a great multiple listing service search tool that'll get you information on everything from San Francisco all the way down to Monterey. I also have access to my weekly podcast, so if you're interested in hearing what's going on with real estate and in news or things that'll affect what you might do as a buyer, seller, or investor in today's real estate market, go ahead and take a listen to that. You can listen to it either through my website or on your personal iPod or other MP3 device. If you'd like to get in contact with me via email, feel free to contact me at robert@soldbyrobert.com. If you prefer to chat on the phone, just dial 408-852-0525. And if you prefer to use online chatting software, you can use AOL Instant Messenger, Google Talk, Yahoo IM at the screen name The Rebel Broker. And if you're a Skype user, the screen name is Rebel Broker. Of course, referrals are always appreciated. If you or anyone you know is interested in buying or selling or investing in real estate here in Silicon Valley, I'll be happy to help you any way I can. But also, if you're not in the Silicon Valley area and you're interested in finding the right agent for you, feel free to get in touch. I can do all the legwork to help you track down the perfect agent for your needs. Just get in contact with me using any of the methods outlined above, and I'll be happy to track down the right agent for you. All right, now let's go ahead and jump in and take a look at the numbers. We'll start off as usual with the supply and demand numbers for Santa Clara County. Again, this is for September of 2009. The first numbers we look at will be the inventory numbers. Excuse me, these will be the solds numbers. I was surprised there for a second when those came up as such small numbers. So sales are up 24.61% from the same time last year, as you can see. That's good news for the county. That's 222 more homes sold in September of 2009 than in 2008, for a grand total of 1,124 homes sold in Silicon Valley, Santa Clara County. Now, as far as new listings are concerned, we can see that we've also had a drop in the number of homes added to the marketplace. That's also good news for the market. Anything we can do to control the increase in the inventory is going to be a good thing, and it actually works in everybody's best interest if we can get more of a balanced market, and the key to that is really reducing this inventory. The new listings is down 24.26%. That's 468 fewer homes added to the market in September of 2009 at the same time in 2008. And the total number of homes listed was 1,422. Now, the total inventory, this is excellent news for the county. And you can see it's a dramatic change just from last year. From 2004 to 2008, we had a steady ramp up in inventory that really hit us hard once we hit 2008 with everything else that started happening in 2008 as far as markets and the downturns. We started seeing all those subprime loans coming home to roost, so to speak. But the inventory has really managed to get dropped this year. 2009 is really the pivotal year for this number. The total inventory is down 40.51%. That is 2,340 fewer homes on the market in Santa Clara County in September of 2009 at the same time last year. That is an excellent number. The total homes for sale right now is 3,436. So these are all very encouraging numbers. We've got declining numbers of homes being added to the market this month. We've got an increase in sales. In fact, look at those sales numbers since 2007 when they hit their rock bottom. We've managed to get those numbers up since then pretty steadily, which is good news. And it's good to see that sort of a progression, particularly when you're looking at a year-to-year snapshot where really all we're looking at is 1 month. And to see the inventory numbers down like that is also very encouraging. Now, the ratio here is at 3.06. Let me explain what that means. It has two ways of looking at this number. One is how long it would take us to sell every home currently in inventory if the inventory and the sales froze where they are now. So right now, just a little over 3 months to sell all of the stock on hand in Santa Clara County, and that is an extremely healthy number. You can see way back in 2007 and 2008, the number was much higher. Back in 2007, it looks like it was about 10 homes, or about 10 months worth of inventory. Having it standing right around 3 is actually very good. Another way of thinking of this number is what I like to call the competition index for sellers. For every home that's sold, there's about 3 homes on the market, and that's a pretty healthy number. It's still giving buyers some choice. It's actually even a little bit leveraged towards sellers at the moment, but I wouldn't go too far with that because prices have really come down, indicating a real good market for buyers right now. Now, last month, that number stood at 3.62, so we've actually seen it improve since last month, which is also good news for the county. Excuse me. Now, let's go ahead and take a look at these same numbers, just going back months. Instead of focusing on just the same month going back to 1999, we're going to look straight back along the calendar all the way to March of 2008. And again, these are the sales numbers, so the number of properties that have sold. You can see that when this is all averaged out, things are on the increase. We had a peak there in July. When you hit those summer seasons, you expect those numbers to go up a little bit. But, you'd actually also expect that to continue on through August as it did last year. You can see that from June to September of last year, we really had relatively flat performance. We had we sort of got a peak early in this year, in 2009 summer season. You can see it really ramped up quickly in June and July. But then in August, we really saw a drop, and then we recovered a little bit in September. And remember, these numbers are delayed by about a month. So all those folks who started the buying process in July usually will close in August, at least for conventional sales. Now, for any properties that were short sales or foreclosures, it'll often take longer for those escrows to close. So that may account for some of the delay here as far as some of these escrows closing when folks would be doing most of their shopping. But as far as what the change has been from August to September, we've had a 14.46% increase in sales. That is 142 more homes sold in September than August, and that's actually a pretty interesting increase. Now, as far as listings are concerned, the number of homes added to the market each month, again, a pretty steady decline here. It's actually increased from last month. It's up a very small amount, 0.14%. That's only 2 more homes listed. Now, when you consider the thousands of homes floating around in this marketplace, only having 2 more homes listed in the month of September than August is really about as flat as you can get when you're talking about these kinds of statistics. Now, as far as inventory numbers go, look at that. What a dramatic trend we're seeing here. We even had a very light trend in the winter months when you'd normally expect much more of a dip in the inventory. We didn't see quite as much. I think that has to do with the fact that a lot of these folks, simply couldn't take their homes off the market. They couldn't really afford to. They needed to get out of these properties, probably for, I'm sure the short sales and foreclosures had an effect on that as well, since those typically don't go off the market during the holiday season as well. Now, the inventory is down from August by 3.56%. That's 127 fewer homes in inventory than just 30 days ago. So we're definitely selling off the inventory at a pretty good rate. That's very good news. And we'll hope that this trend sort of continues. It would actually be nice to see these numbers sort of flattening out right now. I think the ratios are at a healthy level, and it'd be kind of nice to see things sort of flattening out so that we don't see a dramatic imbalance in the market for buyers and sellers. Now let's go ahead and take a look at the short sale and foreclosure numbers. These are the percentages of properties. Now, last month we saw short sales making up 15% of the overall market. We saw foreclosures making up 28%, and conventional properties made up 57%. So we're seeing short sales and foreclosures are playing a big part in how our market's unfolding here. I think that as we mentioned before, that probably has a lot to do with why we didn't see a bigger dip in inventory during the winter months. Now let's go ahead and take a look and see what we're doing this month. Short sales actually went up 1%, up to 16% of the total market. Foreclosures also went up 1% to 29%. And conventionals dropped to 55% of the total market. Excuse me. So again, the numbers we're seeing here really do bear that out. Now let's take a look at home prices. You can see we've had a pretty steady drop. Well, probably a dramatic drop from 2007 to 2008, and then more of a gentle drop from 2008 to 2009 as things sort of settle out. Now the highest, let's see, we had a change from last year. We had an 8.41% drop in the average price. That's a $63,095 drop. And what's interesting to note here isn't that isn't that this is an indicator of how you should be pricing your home. It's really sort of a good indicator of where the action is as far as the averages are concerned. Now, we don't have a median price for the entire county. There's too many smaller areas that make that up to really calculate a median effectively. But what we do learn from this is that everybody really needs to evaluate where their prices are right now to determine how they are competitively with other homes in the market. And that's really where I think anyone who's trying to evaluate the value of their home needs to start. You need to start not only with the properties that have sold within the last 3 months, which is what most real estate agents will do for you, but you really need to factor in the competition. It's a little bit less impactful than it has been in previous months, simply because there's far fewer homes for buyers to choose from than just a few months ago. But I think it's also still a key to make sure that you're the best priced home in your price range to make sure that you're getting your property sold. Now, the average price was standing at $687,264, and as you can see, that's down from last year, and we already mentioned that was down 8.41%. Let's go ahead and take a look at the same numbers. Just going over calendar-wise now, just over the past, all the way to April of 08. The trend is pretty hard to miss here, and with the volume of sales we've had, these are very solid numbers. You can see that we had a really big dip. We sort of bottomed out there in January and February. We've been steadily increasing a bit up until July. We peaked out in July, and we've seen it flat in August, then declining a bit over that period of time. And the change from August to September is down 1.41%. That's a $9,856 drop from just 30 days ago. Now let's go ahead and look at how many days it's taking to get these properties sold. You can see that in past years in September, we had some relatively smaller numbers. 2008, we really peaked out. We're still in 2008 and 2009 higher than any other years previous to that, going back to 1999. But at least we're down from last year. In fact, we're down 19.54%. That's 17 fewer days to get a home sold in 2009 than it took at the same time of 2008. And as far as recent months, let's go ahead and take a look and see what sort of trend we've been seeing. Are we on our way up or are we on our way down? Now, clearly, we've seen a trend going up all the way through until March, where things sort of peaked out. The January to March time frame where things were up higher. Pretty good recovery as far as the amount of time it's taking to get homes sold dropping. Now, between August and September, we had the days on market drop 13.56%. That was 11 fewer days to get a home sold in September than in August. So good news for buyers and sellers. And I think from a standpoint of just sellers calibrating themselves, I think these are fairly realistic numbers to work with. For buyers, I think that this indicates, I think all of these numbers together sort of indicate that you don't have as much, you still have plenty of choice. There's still plenty of inventory out there. There's a little bit more competition for the properties out there. It'll be interesting to see how this pans out as we move forward with the market. Now, again, here's all the different ways to get in contact with me. I won't go through and read through them all since I've already done that at the beginning of the presentation, but I do appreciate you taking the time to listen to these market analysis videos, and I look forward to talking to you all next time.